Welcome back to the Profitable Mindset Podcast. We're all about helping you build that financial fortress. And today, we're going to lay down a pretty important brick.
Absolutely.
We're going to be talking about emergency funds, which honestly, a lot of people kind of skip over, right?
Yeah. It's one of those things you don't think about, especially when you're, excited about getting into the market and making money.
Right, exactly. You're like all gung-ho about trading and investing, but then, life happens.
Exactly.
So I've got to be prepared. So let's just get right into it. What exactly is an emergency fund, and why is it extra important for people like us, traders and investors?
Well, an emergency fund, to put it simply, is just money that you set aside for the unexpected, for those, oh no moments.
Okay, so it's not like our fun money.
Right, not for vacations or new gadgets.
It's like the serious stuff, the rainy day money.
Yes. And for traders and investors, it's even more important.
Because?
Well, think about it. Our income. It's not always predictable. And the markets, those can be risky.
Oh, yeah, those markets can definitely throw some curveballs.
Exactly. So you need that extra cushion, that safety net, to make good decisions when things get tough.
So we're not making those, panic-driven moves.
Right. If you're worried about paying rent or bills because the market took a dip, you can't trade effectively.
I can only imagine you'd be a mess emotionally.
Exactly. Fear and panic, they don't exactly lead to profitable outcomes.
I mean, that makes sense, right? If your basic needs aren't met, it's hard to focus on anything else.
Exactly. An emergency fund takes away that stress. It lets you be more rational, strategic with your trading and investing.
So it's like peace of mind is part of the equation here.
Huge part. Because think about it, without that cushion, you might be forced to sell your investments at the worst possible time just to cover bills.
Oh, I've heard some horror stories about that. People selling off winning positions just because they had an unexpected car repair or something.
It happens all the time. It's letting short-term problems mess up your long-term goals. An emergency fund helps you avoid that.
Keeps you in control, even when things feel out of control.
Exactly. Now, I know what you're thinking. Okay, this all sounds great, but how much money are we actually talking about?
Yeah, that's the big question, right? Is there some magic number everyone should aim for?
If only it were that simple. It really depends on your situation.
Okay, so walk us through it. What are the things we need to think about?
Well, there are a few key things. Your monthly expenses, how stable your income is, how much you rely on the market for income, and also your own risk tolerance.
Okay, break that down for us. Monthly expenses, that's pretty straightforward, right?
Yeah.
Rent, food, bills, all that.
Exactly. It's the bare minimum you need to survive each month. That's the starting point.
So someone with higher expenses would need a bigger emergency fund.
Obviously. Then we look at income stability. Steady paycheck. You might be okay with a smaller fund, but if your income is up and down like, say, a freelancer, you'll need more set aside.
Makes sense. And for traders, that income could be pretty volatile, right?
Extremely. So if you're depending on the market for most of your income, you need a bigger buffer. You need to be able to ride out those dips and dry spells.
So basically, the more uncertain your income, the bigger the safety net needs to be.
Exactly. And then there's risk tolerance. Some people are okay with a little more risk. Some people are more cautious.
Like if you're trading with a lot of leverage or in more volatile markets, you might want a bigger cushion than someone who's taking a more conservative approach.
Precisely. Your emergency fund should reflect the overall risk you're comfortable with in your financial life.
I like that. It's about aligning things, making it all make sense together.
Exactly. It's not one size fits all. Let's say we have two people. Sarah, she has a steady job, invests a little on the side. Then there's Mike. He's a full-time Forex trader, uses a lot of leverage. Their emergency funds are going to look different.
Okay, yeah, let's use those examples. Let's say Sarah's basic expenses are $3,000 a month.
Okay, so since she has that steady paycheck, she might be comfortable with a 3 to 6 month emergency fund.
So that's between $9,000 and $18,000. Now, Mike, let's say his expenses are higher, maybe $4,500 a month because he's living that trader lifestyle.
And he's 100% reliant on the market. With the leverage he's using, he might want a 9 to 12 month emergency fund.
Whoa, so his target is more like $40,500 to $54,000. That's a big difference.
It is. But it reflects their different situations. There's no right or wrong answer as long as you've thought it through.
Okay, this is making a lot of sense. But I know some people listening might be thinking, okay, a 5-figure emergency fund, that feels impossible, especially if I'm just starting out.
Building that fund is a journey, not a race. You don't need to have it all at
It's
once.
like changing your mindset, right? It's not an extra expense, it's an investment in your peace of mind.
Exactly. Maybe you redirect some of the money you're going to put into the market just until you hit your emergency fund goal.
And I've always been a big fan of automation. Just like you'd set up automatic transfers for investments, do the same for your emergency fund. Even $20 a week, that adds up over time.
It does. Small, consistent actions, they create big results eventually.
Speaking of results, let's talk about what happens if you don't have an emergency fund.
Oh, that's when things can get really scary. It's like walking a financial tightrope without a safety net.
Yikes. One wrong move.
And you're in trouble. Let's imagine you have an unexpected medical bill, or even worse, you lose your job. Without an emergency fund, you might be tempted to make some bad decisions.
I've seen traders, they get desperate to make it back quickly, and they end up losing even more.
It's a downward spiral. Over-leveraging, taking crazy risks, even dipping into retirement savings, things you should never do.
It's like pouring gasoline on a fire, making the problem way worse.
And then there's a debt trap. Using credit cards to cover emergencies, that just creates more stress and eats into your future profits.
High interest rates are not your friend.
Definitely not. An emergency fund protects you from that desperation. It lets you stay calm, assess the situation, and make a smart plan.
It's like having that financial breathing room.
Precisely. And that peace of mind, that's worth a lot.
So we're all on board with the idea that an emergency fund is a must-have. We know how to figure out how much we need. Now, the big question, where do we keep this money?
Ah, good question. You want a balance. Safety, liquidity, and, if possible, a little bit of return. You don't want it in risky investments, but you also don't want it sitting in a low-interest checking account doing nothing.
So where's that sweet spot?
There are a few options. High-yield savings accounts are popular. They're FDIC insured, so your money is protected, and the rates are better than regular checking accounts.
And you can usually get to your money quickly if you need it.
Exactly. Money market accounts are another option. They might have slightly higher returns, but sometimes they have minimum balance requirements.
And what about something super safe, like treasury bills?
Those can be great, especially for a part of your emergency fund that you don't think you'll need right away.
Because they're backed by the U.S. government, they're about as safe as you can get.
Yeah. Absolutely. The main thing is your emergency fund shouldn't be exposed to the same risks as your investments.
It's about protecting your capital, not gambling with it. It's the foundation of your whole financial fortress.
And speaking of fortresses, that brings us to another important point. Market downturns.
Oh yeah, those times when everyone starts panicking.
If you have an emergency fund, you don't have to sell your investments at a loss just to pay your bills.
You can ride out the storm, wait for things to calm down.
It's your anchor in a choppy sea. It keeps you grounded, keeps you from making rash decisions out of fear.
You know, it's funny. Most people think of an emergency fund as purely defensive,
Right.
like a way to protect yourself. But it can actually be kind of offensive too,
How so?
because if you have cash ready during a market downturn, you're in a position to buy low. You can take advantage of those opportunities that pop up when everyone else is selling.
Ah, I see what you mean. It's like having a secret weapon, a reserve of buying power when prices are down.
Exactly. And that changes your whole mindset. You're not afraid of the volatility. You're looking for it.
Oh.
You see it as an opportunity.
That's a great point. It shifts your perspective from fear to, like, almost excitement, and that can make a huge difference in your trading.
So an emergency fund isn't just about surviving bad times. It's about setting yourself up to thrive, even when things are tough.
It's about resilience, having the flexibility to navigate any market condition.
So to recap, an emergency fund is essential, especially for traders and investors. We talked about how to figure out the right amount, where to keep it safe, and how it can help you both weather storms and grab opportunities.
We covered a lot, but we're not done yet.
Right. In the next part, we'll dive deeper into the practical stuff, like how to actually UEC that emergency fund wisely and make sure it's always there for you.
Stay tuned. So we just talked about how an emergency fund can actually help you take advantage of, like, market downturns when other people are panicking.
Yeah, it's like turning a bad situation into a chance to get ahead.
Exactly. But let's be real. There will be times when you actually have to use that money.
Right. It's not just sitting there looking pretty. So how do we know when to use it?
That's where it gets tricky, right? Because we don't want to just spend it on anything.
Yeah, we need to be smart about it. What's a true emergency versus something we can maybe put off or figure out another way to pay for?
Good question. A true emergency. It has to be two things: urgent and necessary. Something you can't put off.
Okay, so like a sudden medical bill, a big car repair, those kind of things. Not a new phone, because yours is a little slow.
Exactly. And it has to be something you couldn't have planned for, budgeted
So
for.
no dipping into the emergency fund for that concert ticket you really want.
Right. Even when you do have a real emergency, it's good to try other things first before you touch that emergency fund.
Like what?
Look at your budget. Can you cut back somewhere, even temporarily? Maybe pause some subscriptions, eat out less, that kind of thing.
Little things add up.
Yeah, they do. And depending on the situation, you could even think about using credit, but carefully.
So not just whipping out the credit card for anything.
Right, only if it's a low-interest option and you have a plan to pay it back quickly.
Strategic credit use.
Exactly. And don't be afraid to negotiate. Sometimes you can get a payment plan for a big bill, maybe with a doctor or a landlord.
Never hurts to ask.
Never. So ideally, you can avoid using that emergency fund altogether.
Okay, but let's say we've tried everything and we really need to use it. What's the best way to do that?
This is where having that money separate from your everyday spending account comes in, so you're not tempted to just, spend it easily.
Out of sight, out of mind kind of thing.
Exactly. Some people even set up extra steps to get to that money, like needing approval from their bank or a waiting period for a transfer.
So it forces you to stop and think, really think, before you use it.
Exactly. It's about being intentional. And you should always, always track every withdrawal. Make sure you're only using it for real emergencies.
Okay, that makes sense. But let's talk about the emotional side of things. Emergencies can be stressful. It's easy to panic and make bad decisions.
Oh, absolutely. When we're stressed, we don't always think clearly. So the first thing is take a deep breath. Don't just react.
Step back. Assess the situation.
Exactly. Ask yourself, is this really an emergency? Go back to those criteria we talked about. And if you're really struggling, talk to someone you trust.
Like a friend, a mentor, someone who can give you an outside perspective.
Exactly. Sometimes just saying things out loud helps you see things more clearly.
Okay, so you've made it through the crisis. You've used some of your emergency fund. What now?
Time to refill it. It's not a one-time thing. You've got to get that money back in there so you're prepared for the next time.
Replenishing those reserves, make it a priority.
Absolutely. Focus on those good habits, put some money back into the fund every time you get paid, or make a profit from trading.
Maybe cut back on spending for a little while or find ways to make some extra income.
Right. And if you get a bonus, a tax refund, a big win in the market, put some of that towards your emergency fund too.
It's like hitting the reset button.
Exactly. I always tell people to set a deadline, maybe 6 months, a year, to have that fund fully back up to where it was.
Gives you something to work towards.
It does. So let's imagine, for example, a trader has a bad losing streak. Without an emergency fund, they might panic, make bad trades, and lose even more.
That's a recipe for disaster.
But with an emergency fund, they can cover their expenses while they take a break, reevaluate their strategy, and come back stronger.
It gives them the space to breathe, to think clearly.
Exactly. They can approach the market again with a calm mind, knowing their finances are okay. Or imagine someone has unexpected medical bills.
Those can be huge, especially if you don't have good insurance.
Right. An emergency fund means you can pay those bills without having to sell your investments at a bad time.
Protecting your portfolio from those unexpected life events.
Exactly. Your investments keep growing while you focus on getting better.
These examples really show how important an emergency fund is in the real world. But what are some mistakes people make when using it?
Well, sometimes people take out more than they really need. They over-withdraw, and then there's nothing left for the next emergency.
It's like overspending your budget. It creates a whole mess.
Another mistake is using it for things that aren't actually emergencies. We got to be honest with ourselves about what's truly necessary.
No cheating. And probably the biggest mistake is not refilling the fund after you use it.
You're just setting yourself up for trouble down the road. It's a cycle. Build, use, replenish, repeat.
Keeps that financial safety net strong.
And that gives you confidence, the flexibility to handle whatever life throws at you and whatever happens in the markets.
So having that emergency fund, it's not about being restrictive. It's actually about having more freedom, more peace of mind.
Exactly. It's about taking control. But it doesn't mean you can just be reckless with your finances. You still need to be smart about risk.
Right. It's a balance, preparedness, and smart decision-making.
And that brings up an interesting point. Sometimes it's actually better to not use your emergency fund.
Wait, really? When would that be?
Let's say there's a great investment opportunity. A stock you've been watching drops in price. It's tempting to use your emergency fund to buy it, right?
Oh, yeah. Get in while it's cheap.
But that emergency money is meant for safety, not for risky investments.
Stay focused on its purpose.
Exactly. And if something comes up that you can cover by adjusting your budget or maybe cutting back on some things, do that instead of draining your emergency fund.
So we're always weighing the options, finding the best solution.
Making those smart, intentional choices with our money.
It's all about being responsible and prepared.
Exactly. That mindset, plus a healthy emergency fund, that's how you handle all the uncertainty that comes with life and with trading.
This has been a great conversation about the ins and outs of emergency funds. We covered a lot, why we need them, how much to have, where to keep them, and even when not to use them.
Lots of good stuff. But there's even more to learn. Next time, we're going to talk about taking that safety net to the next level, building even more financial security.
I'm excited to hear about that. So last time we were talking about expanding our safety net, going beyond just the basic emergency fund.
Right. It's about taking it to the next level, building a really solid financial fortress,
Yeah. Okay. So how do we do that? What are the steps to make that happen?
I think of it as different tiers of protection. First, you have that basic emergency fund, the one we talked about, for immediate needs.
Okay. That's the foundation, right?
Yeah.
1 to 3 months of expenses, easy to access.
Exactly. Then you build on that. The next tier, it's about short-term resilience. So being able to cover, say, 3 to 9 months of expenses.
For those bigger disruptions, like if you lose your job or the market goes crazy for a while.
Precisely. For this tier, you might consider things like money market accounts, CDs, maybe even some short-term treasury bills.
Okay, so we're still looking for safety and liquidity, but maybe a bit more return than a regular savings account.
Right. And then the third tier, long-term stability. This is for the really big stuff, those major life events, or if there's a huge financial crisis.
We're talking economic meltdown, career changes, those kind of things.
Yeah.
This is like building a bunker.
Yeah, exactly. Here, you might put some money into longer-term, low-risk investments, bond funds, maybe high-quality dividend stocks.
So dipping our toes into investing, but still being very careful.
Right, it's all about balance, security and growth as you build up those layers of protection.
I like this tier system. It feels very organized. But what about those expenses that don't really fit into those basic needs? Like, what if you need a new roof for your house? Or you want to help your kids with college?
That's where what I call the peace of mind fund comes in. It's separate from those other tiers, and it's specifically for those bigger expenses that aren't emergencies, but they can still cause stress.
It's like planning ahead, being proactive.
Exactly. It gives you a sense of control. You're not just caught off guard.
That's great. It's like having a safety net for your goals, not just for emergencies. Speaking of which, let's talk about passive income. That seems like a really powerful way to grow that safety net even faster.
Absolutely. Building financial security. It's not just about saving. It's about making your money work for you.
Yeah.
And passive income, that's a big part of that.
Yeah, things like dividends from investments, rental income, maybe even money from a side hustle you enjoy. It's like multiple streams of income coming in.
Exactly. Your money's working even when you're not. It's a beautiful thing.
But we can't forget about inflation. That can really eat away at our savings if we're not careful.
Right. Inflation's a constant battle. You want to make sure your money is at least keeping up with it, if not growing faster.
So we need to pay attention to those interest rates. Maybe look at some savings options that offer protection from inflation.
Exactly. Things like TPS, Treasury inflation-protected securities, or certain kinds of bonds can help with that.
So even within that safe, liquid part of our portfolio, we're still being strategic.
Always got to be thinking ahead, right? Making those smart choices.
This has been an awesome conversation. We went from that basic emergency fund to this whole multi-layered financial fortress.
We covered a lot. How to define an emergency, use the funds wisely, replenish them, and even when it's better not to use them.
Before we wrap up, what are the big takeaways you want listeners to remember?
I think the most important thing is building financial security. It's not about depriving yourself, it's about empowering yourself.
Yeah, it's about having the freedom to do what you want, pursue your goals, knowing you're prepared for whatever comes your way.
And it doesn't have to be perfect, just be consistent. Small steps over time, they make a huge difference.
So even if you can only put aside a little bit each week, just start. Make it automatic, make it a habit.
And once you have that foundation, you can start building on it, adding those extra layers of protection, exploring passive income, thinking about your long-term goals.
It's all about taking control of your financial future, building a life you love.
It all starts with that first step, making the decision to prioritize your financial well-being.
Couldn't have said it better myself. Thanks for all the great advice.
My pleasure.
And to everyone listening, take action. Building that financial safety net, it's one of the best things you can do for yourself. Until next time, keep that profitable mindset.